Hello and welcome to the channel. There's a lot of animosity about what's going on in the economy and the stock market right now in light of the recent tariffs. There is also a certain indicator that we want to keep our eyes on that could trigger, and we haven't seen this happen since the beginning of 2022 before we entered the bear market. If you're new to the channel, a little bit about myself. My name is David Sedia. I'm a financial advisor who works alongside federal employees. And before we dive in today, the big question to ask ourselves, are tariffs going to trigger a death cross? Before we dive into that, what we need to do is we need to go look back at 2018, which was the last time that we saw tariffs being implemented. Back then, Trump was in office. We had tariffs going on with China as well as Mexico. And what we saw was markets took a pretty big hit. They went down about 19.5%. Just narrowly avoided a bear market, and negotiations were reached, and we saw markets have a pretty swift recovery, taking about 5 months. Now, as we relate that to what's currently going on, one of the things to keep in mind is this is on a bigger scale, right? This is not just China and Mexico. This is also Taiwan, India, the European Union, Canada, one of our very big trading partners. So what we're seeing this time around could be potentially on a bigger scale. We've seen the S&P 500 drop about 10% from the all-time highs to the low point now. We've seen a 16.5% drop. So we are just 3.5% away from potentially entering a bear market. And if we do enter a bear market, what you tend to see is a lot of investors panic, and you see a lot of panic selling, which typically will drive prices even further down. So this is definitely something that you want to keep your eyes on. But let's also go ahead and talk about the death cross, which is also something that could happen simultaneously, or this could happen on its own and could also help to drive prices even lower. Let me break this one down. The main blue line here is the S&P 500. A lot of you know of that as your C fund. The blue stable line here is the recent market uptrend that we've had that we broke through back in February. The red and green line are what we're going to spend some time talking about. The red line is the 50-day moving average, or the average price of the most recent 50 days, which is plotted each day. And the green line is going to be the most recent 200 days. So it's going to be a little bit more stable, right? 1 out of 200 days. Each day is not going to have as much of an impact. When the 50-day moving average falls below the 200-day moving average, that will form a death cross, and is something that I promise I am not the only person looking at this. There's going to be a lot of traders and investors who will see that death cross and may liquidate investments, or we might see markets head down further. Because what a death cross does is it serves as a confirmation that we have now entered a downtrend in the market. And if we have those lines cross the opposite direction, it forms as a golden cross. We like golden crosses. Golden crosses signal that we are now, or confirm that we are now in an uptrend in the market. Not every time do we have this setup where it looks like we're going to have a death cross and we enter one. A prime example will be right here in the middle of the screen back at the end of 2023, where it looked like we were going to have this intersection, but we were able to narrowly avoid it. So I don't want to say we are or are not going to have a death cross, but it is something that you're going to want to keep your eye on over the next several days or weeks. But in the coming days, please keep an eye out. Make sure you like the video, subscribe for more. There'll be some additional videos to come, especially as we get potentially closer to the intersection here, or if we do enter into a death cross, we will talk about what you should do at that point. So thank you all for your time. Hope you enjoyed the video, and hope to see you in more videos in the future.